And in our top business story, the UAE and the International Organization for Migration have signed an agreement to conduct a field study about the labour recruitment industry in line with the framework of the Abu Dhabi Dialogue to develop an understanding of the fundamental challenges facing labour sending and receiving countries. The agreement, which will target the labour recruitment industry in the UAE, Kerala in India and Nepal for 1 year, was signed in Dubai by His Excellency Sakhar Ghabash, the UAE Minister of Labour, and William Lassie Swing, the Director General of the IOM. Commenting on the agreement, Minister Ghabash stated that the UAE will continue its active role in developing procedures for receiving temporary contractual labourers while providing them with all of the proper protections. The minister added that mechanisms are being developed between participating countries alongside relevant labour international organisations to exchange new ideas and experiences on best practices that will support and strengthen bilateral and regional cooperation efforts and partnerships. The study will culminate in a report that provides a comprehensive analysis of the international labour recruitment industry's structural features and the interrelations between its various stakeholders, including prospective workers, sub-agents, agents, recruiters and employers. The study will also develop a set of recommendations to address the structural flaws within the industry. Commenting on the decision to study migration corridors from Kerala and Nepal to the Middle East, the IOM stated that the main reason was both have sizable recruitment industries with large number of workers going to the Gulf states, further explaining that migration to the Gulf is more established in Kerala, while it has only more recently emerged in Nepal. A new report has revealed that Dubai has led the GCC's corporate earnings growth in 2014 with a robust 47% surge. According to a 9-page study released by Kuwait's global investment house, Dubai's corporate earnings expanded 47% year-on-year to 26.42 billion dirhams in 2014, thanks to the strong performance of banks, real estate, construction, investment and financial services companies in the Emirate. Driven by Dubai, the UAE market recorded robust corporate earnings in 2014, which outperformed Abu Dhabi's corporate earnings growth of 20.8%. According to Global's GCC Earnings Review 2014 report, earnings growth in Dubai's banking sector was driven by Emirates NBD at 57.8% and Dubai Islamic Bank at 65.2%. Earnings of the real estate and construction sector in Dubai rose to 8 billion dirhams, driven by robust growth in the profit of Damac properties at 189.6%. The investment and financial services sector was driven by Dubai Investment with 63.1% growth. Dubai Financial Market Co. posted a sharp 166.8% increase in profit during 2014, led by growth in revenues due to increase in trading values. Looking abroad, and Global Investment House said in the report that corporate earnings in the GCC region rose 9.8% year-on-year to $68.5 billion. Broadly, all the countries posted gains in the corporate earnings in 2014, except Oman. And the dividends paid out by the UAE's leading listed companies grew at a double-digit rate to a record last year and are expected to do the same in the current year. Research by the Dubai-based investment bank Arqam Capital shows that the payouts have grown each year since 2010 as the country's economy recovered from the global economic crisis. According to an online report, money managers analysing the payouts stated that it is a sign that companies and banks are not worried that the drop in the price of oil and regional political turbulence will dent earnings significantly. The total amount of dividends paid by UAE companies grew 11% in 2014 to 28.7 billion dirhams from 26.2 billion dirhams in 2013 and are forecast to grow at a similar rate this year to 31.9 billion dirhams, according to the data compiled by Arqam. The data represents 95% of total listed companies in the UAE and excludes the special 9 billion dirham dividend paid out by the property developer Emaar after selling its retail business Emaar Malls Group. Majid Al Futtaim has announced plans to double its size and market share over the next 5 years, with regional expansion high on the agenda as the company marked its 20th anniversary. At a press conference, senior officials of the UAE-based shopping mall, retail and leisure management company announced that since the opening of Deira City Centre in 1995, the company now operates 12 shopping malls across the region with an average annual footfall of 250 million visitors. With 45 billion dirhams in asset value, it was announced that the company holds a 25% market share in the regional shopping mall industry and anticipates continued regional growth across its entertainment attractions such as Vox Cinemas and Magic Planet. Looking ahead, Majid Al Futtaim plans to expand the Carrefour brand into 19 new countries, particularly Africa and CIS countries, over the next few years, to cement its presence in 38 countries around the world. Among other notable projects in the pipeline is the 5-year investment of 22.5 billion Egyptian pounds towards developing Mall of Egypt, which will also host the first ever indoor ski slope in Africa. Commenting on the regional trend, the CEO of Majid Al Futtaim Ventures stated that there is a growing appetite for an integrated lifestyle shopping experience at malls among consumers in the region.
When you look at across Majid Al Futtaim, more than 250 million people experience a Majid Al Futtaim great moment annually. Part of that has been our integrated business model with shopping malls, Carrefour, retail and entertainment. So if you take, for example, Vox Cinemas, we have served more than 50 million customers this year, 7 million alone in the last year. Ski Dubai is now attracting more than 1 million paying customers every year, and our Magic Planet and our entertainment businesses also generate footfall in excess of 8 to 9 million every year. And we know that the primary driver for visiting shopping malls is leisure and entertainment, whether that is going to the cinema, skiing, or having a nice meal, or a combination of all of that. And that is something that we at Majid Al Futtaim have excelled at. And when you look at our entertainment and cinema business, we're actually more and more providing that as well outside our own shopping malls and outside the UAE.